Hi guys, Hosebo. I understand. I totally understand that almost all Chinese stocks prices are dropping. Alibaba stock price dropped 33% from its recent peak. Didi Stock dropped 43% after its recent IPO. Tencent stock and Didi Stock both dropped around 32%. So, is this a crisis or an opportunity for us? After investing in the stock market for more than 10 years, personally, this is my very first time experiencing a massive Chinese government crackdown towards Chinese listed companies. From suspending Ant Group IPO to removing Didi's app from Chinese stores to cracking down on Chinese private educators. These actions have caused many Chinese stocks to drop 30, 40 or even 90%. In this video, you will discover 3 main crackdowns by the Chinese regulators so that you can decide whether this is a crisis or an opportunity for you. The first crackdown is Chinese Antimonopoly law. The Chinese regulators hope to have fair competition in China instead of any single company dominating the whole industry. And it is so obvious that Tencent and Alibaba are dominating the Chinese market in many areas of life, from online shopping to social media to even payment systems. Anyway, the Alibaba probe has been concluded with a $2.8 billion fine, but we know that this is just the beginning because the Chinese regulators are constantly looking out if any company did not obey the anti-monopoly law. It is like you wanting to spend time with a group of friends at a party, but your girlfriend is sitting right at a corner staring at you, checking whether you have any close contact with any girls. You know what I mean? In my opinion, if every company complies with the regulations, they have nothing to worry about and their business will continue to grow. Basically, if you did nothing wrong, you do not have to worry whether your girlfriend is staring at you at a party. Agree? The second crackdown is a new data security law to stop tech giants from collecting more detailed personal information in their database. The Chinese regulators plan to review Didi's operations and they suspect that Didi app has been illegally collecting and using personal data. The Chinese regulators even ordered online stores to remove Didi's ride-hailing app, causing Didi stock price to drop more than 40%. And you know what? Before IPO, the Chinese regulators already told Didi to delay its IPO to examine its data security measures, but Didi totally ignored it and pressed ahead as it was facing pressure from investors. Some sources mention that Didi may face a huge fine even greater than the record $2.8 billion paid by Alibaba and may be forced to delist the whole company. Does this scenario remind you of the consequences of not listening to your girlfriend or wife? Or is it just me? Okay, let's continue. The third crackdown, which just happened a few days ago, is really shocking to me. The Chinese regulators banned Chinese private education companies from raising money through stock listing. And because of this news, Chinese education stocks crashed more than 60% in just one day. The objective of these new regulations is to reduce the cost of education so as to encourage people to have more children. On top of this, the Chinese regulators are forcing tutoring companies to go non-profit. Wow. Imagine how many teachers will lose their jobs after this announcement. So, after understanding the 3 major crackdowns by the Chinese regulators, do you think it is a crisis or an opportunity for us to invest in Chinese stocks right now? Do comment down below to share with me your thoughts, as I'm really curious to know about your opinion. Anyway, let me share with you my thoughts and we can discuss further. In my opinion, I will always ask myself 2 questions. Number 1, whether the crackdown or new regulations will be affecting the underlying business. If it does not affect the underlying business, then it is an opportunity. If it affects the underlying business, I'll ask myself the second question, which is whether the crackdown will affect the business in the long term or short term. If it only affects the business in the short term, then it is an opportunity. If it affects the business in the long run, I will consider selling the business as the fundamentals have changed. In my opinion, the anti-monopoly prop does not affect the underlying business of Alibaba, and Alibaba will continue to generate profits every year. Moreover, the $2.8 billion fine is a one-time off expense, and life goes on for Alibaba business. However, forcing tutoring companies to go non-profit will definitely affect the underlying business in the long run, because education companies might not be able to raise their tuition fees and may be pressured to lay off some of their teachers to keep the costs really low. And this is something investors would like to avoid. Thank you so much for watching. I hope you benefit from this sharing. Do subscribe to this channel so that I'm able to share more insights with you and we can profit from the stock market together. Do watch this video right now to find out what will happen if your Chinese stocks get delisted tomorrow. I will see you there.